All right, welcome back into the XRP pod. Today we're going to be diving into something that I think you guys will love, and that is going to be Steven McClurg coming in from Canary Capital. He'll be joining us in a second. The big news, of course, is government shutdown. We'll talk about the impact on ETFs and also get into some of the latest strategies that may be playing into ETFs as a whole. You guys don't want to miss it. Let's just get right into it. Steven McClurg coming in from Canary Capital. How are you, Steven?
I'm fantastic, Paul. It's great to see you.
You're like a regular on the show now, man.
I love you and I love your show, and I enjoy it. This is fantastic.
This is we're getting into a lot of news with the ETFs. A lot of people, this is interesting too because we're talking to so many different ETF companies that are building, growing. We just had Jean Marie on from Coin Shares. The potential here in the U.S. just seems like it's just absolutely going crazy. And even I think it was Eric Balchunas that was saying that he felt we would probably see as many as 100 assets in
Mm.
this category. And my question is this: doesn't that feel like too much?
It does. That's the quick answer is yes. That's too many. The longer answer is, I mean, look, the way that the generic listing standards have played out is that there's only about 14 to 15 assets that are going to qualify under the generic listing standards currently, and I think maybe another 5 to 10 after that. But crypto assets are going to look a lot like precious metals.
Yeah.
Uh, they wanted to do an ETF for every single one of them, and there
Mm.
just weren't enough. There just wasn't enough demand as you started going down the list of market caps. So there's only a handful that actually, from a commodity perspective, that actually work. So I don't think that more than say 25 are going to be relevant.
Okay. Well, I think that's good for the market because I'm not sure even though there are hundreds, if not maybe thousands, I'm not sure what the total count on ETFs are today, but there's so many different categories. You don't necessarily have them all centered around one thing like digital assets. So it is going to be kind of a handful. If you look at Bitcoin and Ethereum, you only have a handful that have been able to really kind of put a mark out there for sure. What about in terms of the XRP ETF? We'll talk about your Solana ETF, but you look at XRP and you had the bold prediction actually on our show talking about the 5 billion inflows in the first month. Do you feel still strongly that that could happen?
I may have changed my mind. I may have been a little bearish.
Oh, okay. I love it when Steve is Steve is bearish on
But
5
I'm going
billion.
to hold to that number because if it hits that number, then at least I'll be right. And if it's 10 billion, then I'm still right because we got at least 5 billion.
Where would that put that would put it up as one of the best performing ETFs, maybe in all of history.
It would. I mean, it would certainly if we saw that kind of inflow. I think it would be definitely in the top 20 ETF of all times, if not in the top 10. I mean,
Yeah.
obviously, we saw how big of a response that Bitcoin got.
Yeah, well, that's what was it, like 3.2 billion in the first, right, 3 billion in one day. So the capacity there for an ETF of seeing in excess of 5 billion in a month for XRP, you feel is underreported.
Yeah, I think it is. I think that's a very safe bet in my opinion. I certainly think that. I mean, let's go kind of back in time when we launched Bitcoin futures when I was with another firm.
Hmm.
The first day there was over $1 billion in inflows, which made it at the time one of the top 10 of all time.
Yeah.
Second Bitcoin futures ETF to launch was still like number 14 of all time at 100 million. So, and that's just day one. So if you think what Bitcoin futures did, I wouldn't be entirely surprised if XRP outperforms what Bitcoin futures did. It's not
Interesting.
going to have the same level as Bitcoin,
Right.
obviously, but if it was a billion in one day, I mean, I think XRP does 2 or 3 billion day one.
Interesting. Well, and the performance of futures has been pretty significant for XRP. So if that's any indicator, obviously that could be huge in general. Um, Okay, so a little bit underreported in terms of the potential where this could go in terms of ETFs. Let's talk a little bit about, the situation at the SEC before we get into government shutdown and all that, because I know you have an opinion on how that plays out. But you look at the SEC, the CFTC now doing their roundtable, they're meeting up. It appears to be the first unification of our government agencies out there that rule the monetary system when it comes to finance. How big of a deal is that right now for regulatory efforts that are happening within businesses like yourself?
Yeah, I think it's very significant. And Paul Atkins is someone who has really done a great job of bridging that gap, and
Yeah.
particularly with his experience at the CFTC, and that is extremely important because I view most crypto assets as either a commodity or a currency, not
Hmm.
not as a security. There are a few that are probably a security as well, but most are going to be in the commodity or currency, or
Sure.
at least the ones that matter, right?
Yeah.
The ones, the top market cap ones, the ones that matter. So the fact that they're coordinating and that there are futures products, and then there's
Yep.
things like ETFs and other funds that hold these things, that coordination is extremely important for the future of this asset class. And by the way, the future of all, several asset classes,
Hmm.
precious metals and other commodities, not just crypto assets. So that's a big change in process, and I think it's going to be extremely important for us going forward.
Yeah, for sure. The number of ETF filers across these assets is starting to spread out. So it's very key that a handful are going to win, much like what we've seen with Bitcoin and Ethereum. But when you look at that, I know Canary Capital poised in the right position, timing wise, as well as just what you guys are doing in terms of efforts in digital assets. I'm curious, when you look at your own investor group or people that are coming to Canary for ETFs, do they see you guys as kind of the digital asset group versus some of the TradFi guys who are wading into digital asset
Well, it's
areas?
funny because most of us are traditional finance guys that waded into crypto
Yeah.
assets, but 10 years ago. So so even though a lot of us have the backgrounds in I'm a former bond manager,
Yep.
bond trader, but a lot of my team also either came from fixed income or
Mhm.
from traditional ETFs from years ago. So yeah, I think that is definitely how people view us, more crypto native, even though our backgrounds say otherwise.
Mhm.
But generally, again, most of our traditional finance folks on our team have been doing this for 10 years plus. We also have a ton of people that this is all they've known, right? Is
Right.
crypto trading. We've got a fantastic team there. So no, I do think that a lot of our investors view us as crypto experts, given how long that we've been doing it, but also having that slant of, yeah, we know how real markets work, we know how traditional products work, we have experience in risk management, we've seen multiple issues in the economy, financial crises. Several different cycles, macro cycles, is what our team is seeing. So yeah, I think we've got a pretty well-rounded team. It's great to be a part of it.
What has Okay, so I've heard you talk about some proprietary indices rather than like traditional CME benchmarks for pricing. Um, how would that work with you guys in terms of that approach? And I guess also how accurate and how transparent is it in how you guys move on these?
Yeah, absolutely. So what's interesting about our team is we also launched several, you know, I would call them high quality ETFs in the past that are not crypto, that were index based. So a good example is there's a product called bullet shares, which is essentially an ETF that actually ends every year, and it's a
Oh, okay. All
suite
right.
of ETFs. And
Yeah.
and when we designed this, or when I was in my Guggenheim days, we designed it so that you have an ETF that say matures in 2015, and I say 2015 because we designed it way back 15 years ago, but it only holds bonds that are callable or mature in 2015, and then the ETF ends, and then you roll it to the next ETF, which is the next year. So we designed this to where it would mimic, um, you know, bond maturities.
Right.
You've got a constant duration across the board. Well, when we were working with index creators, they didn't really understand the bond market, so I had to write the index myself and hand it over to them. Like, hey, this is how
Interesting.
bonds
Okay.
work.
Yeah.
This, and hand it back. The investment grade side was a lot more simple, but the high yield side is not, because high yield bonds, they usually are called earlier than they are matured, and they're usually retired well earlier than they mature, because
Right.
the issuers of high yield bonds are typically, uh, they don't have enough money to pay off their debt, so they just amend and extend constantly. So you've got to design an index that takes that into an account.
Into
So
consideration.
we've
Yeah.
got experience writing indexes on that side of things. And I went to, like, boring bond talk, but we're doing the same thing on the indexes for crypto. Is
Mhm.
that we're looking at things that are a little bit unique, that like, what are things that I want to invest in, right? You may have seen the filing for the Made in America
Yep.
ETF,
Mhm.
and we've have a pretty heavy hand in developing that index itself, because we want things that are truly made in America, that eliminates some things like meme coins, that that's a little bit unique, but something that is a great theme that we want to get behind. So that's
Right.
something we're heavily pursuing and heavily working on.
Yeah, I'm looking at your website. Obviously, you guys are definitely in a different level in terms of what it means for digital assets. And I think the question, when you look at security side of things, and you consider what's happening out there right now with just, I won't call it doubt, but there's people that are in the crypto market that are very concerned about custody.
Mhm.
When you look at custody solutions right now for XRP and these ETFs and other crypto ETF products that you guys are doing, how are you guys doing it? And do you address insurance issues? How's this all work in the back end for being able to secure these assets?
Yeah. So what's interesting is, typically, even when I founded Valkyrie, the first actual hire we made was a cybersecurity professional.
Okay.
And we utilize the same team at Canary. It's a group of former FBI cybersecurity specialists, as well as
Wow.
NSA, and it is the first thing that we do is hire a team like that, to make sure that we do audits, we do reviews of all the exchanges, all the custody that we use. We're completely locked down as a firm,
Hmm.
to make sure that we're not, too, everybody's susceptible to attacks, but not too susceptible to an attack. And so security is, to me, that's the pinnacle of risk management in crypto. I think about risk in a lot of different ways. From my traditional background, it's diversification across counterparties. It's deep review of counterparties. I mean, even the exchanges and custody solutions that we use, we ask every one of them for a set of financials, and
Yeah.
a lot of people do that. Like, okay, what kind of financial shape are you in? And if you go back in time, we were onboarding with FTX several years ago, and we asked them for financials, and they refused. And we said, sorry, we
See
can't
you
onboard
later.
you unless you have financials. And their answer was, well, everybody else is. You'll just miss out.
Hmm.
Well, luckily, we missed out.
Yeah, in a good way, I think,
Yeah.
for sure.
But
Let's
but when
talk.
it comes to crypto, yeah, the cybersecurity is the most important part
Without a
of
doubt, which
management.
I think that kind of effort that you guys have put forth is a key thing for people to get faith behind it. Because I think those are going to be some of the differentiators of smart investors. They're going to look at the lineage of where security is, especially because crypto has kind of had that moniker of a little bit of Wild Westness to it.
Yep.
So it is a big issue. Let's talk about staking because XRP doesn't really have a staking mechanism just yet for institutional, even though we had Hugo from Flare on this podcast just last week. and they're opening it up. They're looking at the potential here for staking within the Flare ecosystem. And I know you guys just filed for, or just put out for, what was it? Yeah, filed for a Solana ETF with staking. Explain, would that show, do you think that's going to matter to an ETF investor at some point in these early days when we start to see staking within ETFs being utilized? Will that be a differentiator for someone who says, no, I just want the XRP ETF, maybe no staking's involved?
Yeah, look, I put staking in two different categories. One of them is, the staking as it relates to processing of transactions in the network itself. So
Hmm.
that's really what the Solana staking is, and so we're simply planning on staking to the network,
Yeah.
processing transaction fee. You get it. That very clearly falls, in my opinion, in a 33 act.
Okay.
It's not a activity that could be defined as potential security activity.
Hmm.
Now, when it comes to other forms of staking, where you're staking the asset, where it's more of I look at it as a repo transaction.
Okay. Okay.
So where
Yeah,
you're essentially taking your asset and lending it out for short periods of time and
exactly.
money. Well, that becomes a security. So it makes it a little bit more complicated in a 33 Act fund, which is what most of these are. So if XRP, for instance, is not a security, but then you're lending it out, you're involved in security activities. So it does
Hmm.
create a level of complication. And to be fair, I haven't dug into Flare a whole lot. I have begun to dig into what Axelar is doing, just because I followed Axelar, the Axelar team for a long time, and I think they're a great team. I need to dig in more to Flare to find out exactly what the
Yeah.
mechanics are.
I'll introduce you to Hugo. I think he could answer some direct questions
Yeah.
around it. It's fairly new in the sense of they just both of these, platforms just launched last week, so it's literally just getting off the ground, without a doubt. Okay, so what about the validity of the ETF? You look at cross-border payments, obviously, is a big thesis for XRP's institutional appeal. Do you think that translates to an ETF investor in any way?
I think they do. What I like about XRP is what they're attempting to build in a lot of areas for financial rails, including cross border payments.
Yep.
I mean, look, cross border payments is the whole reason I got into blockchain to begin with. I was an emerging manager, dealing with emerging markets and bonds, and you see all the stats on how much people have to pay to
Hmm.
send remittance back to their home countries, and so it's just something where it's I've always said this, right? It's not fair that we charge people anywhere between 8 and 12% when they're coming over to another country to work
Yep.
hard, to send money back to their family so that they can eat and get an education, and it's a ridiculously high price. So I'm for any technology that eliminates a lot of that, and that's something that XRP has been working. I mean that that XRP's attempting to do, and I think a lot of people look at it that way too, and it's one of the reasons why XRP is so well known among, I would say, financial professionals, Wall Street. Is
Right.
they see what they're doing, and they see the need, and they see that there will be future demand there. So I do believe that the more that they do on cross border payments, the more demand it'll create, because that's really where the demand is created, is the
Hmm.
leader in financial rails.
So that's kind of a bit of a secret weapon, if you think about XRP in general, in comparison to some other ETF offerings that are going to be out there. Going back to your American-made crypto ETF, what I know XRP is in it, but what percentage of allocation would be XRP in this basket?
Well, we can't really talk too much about that yet because the index isn't published. But yes, if you can imagine
Any plan?
any cryptocurrencies that are made in America that are large cap, that's really where we're going to be focused
Okay,
on.
well, we know XRP is going to be in there, so
Yeah.
there's going to be a percentage of that. I'm counting on a large double digit percentage, but that's just that's what I'm thinking. Obviously, we got a lot going on there, and that which is good. I think. Do you think people are more attracted to the basket products versus the individual asset product?
Well, I think for some assets they're going to be more attracted to the individual assets, but for the rest they're going to be more
Yeah,
interested in the baskets. I do think that things like probably Bitcoin, Ethereum, XRP, and Solana will probably each one of those will probably have more assets than any one basket. But
yeah.
after those four, I think baskets are the next
Maybe
big.
baskets would be in there. Interesting. Okay, so let's get into kind of the architecture of how these ETFs might work. And I'm looking at, beyond management fees. Uh, do you think ETF managers are going to start to explore additional revenue streams? This could be anything from securities lending, all sorts of, at some point, I'm assuming the idea of staking could play into it. Or are there other revenue streams out there within these ETFs other than just price go up for the token?
Yeah, generally companies that are ETF issuers really solely focus on the ETFs themselves.
Hmm.
Now, we're a little bit different where that is one part of our business is focusing on ETFs. Now, not within the ETF, but outside of the ETF business, we run a hedge fund platform.
Yeah,
We also are involved in tokenization. We're involved in treasury management and other lending activities. So for us, it does make sense. It's another completely separate line of business, but we are involved in several other activities outside of
yeah,
ETFs.
for sure. Okay, so let's talk about DATs for a second. We're seeing more announcements out of Seoul, XRP, the big event there. We've seen a lot coming in the way of digital asset treasuries and what it might look like within this space. And you and I have talked about this. I think I'm not sure we're on the same page with it in terms of what I think might do better. But I'm curious, when you look at DATs versus ETFs, do you think investors are looking at these as two completely different products, or is it, oh, they're both, they're managed, they're regulated by the SEC. I'm going to invest in both of these. How do you think investors will look at this in, say, a year?
Yeah, look, I think a smart investor, if you're purely trying to get exposure, right? A smart investor will look at the DAT versus the ETF and say,
Mhm.
well, on an ETF, let's just call it 1% management fee, across the board for some of the smaller assets, versus a DAT where you're paying bankers, you're paying the board of directors, you're paying a separate asset management company 1%. So at the end of the day, when you're paying everything out, it's costing you a lot of times anywhere between 5 to 10% off the top.
Yeah.
So you put in $100 million, you end up with 90, and everybody loses 10% paying bankers and lawyers, and then on top of that, you're paying your asset management company 1%
Hmm.
or
Yeah.
more. I've seen some that are in the 3 to 5% range, which is absolutely ridiculous. And then you're also paying, your officers, your directors. There's a lot of other payments going into it, and by the time everything's done, you're paying, call it 3%, 4%.
Yeah.
So if you want exposure to an asset, would you rather pay 1%, or would you rather pay 3 to 4% after you've already lost 10? That's one way of looking at it. The other way of looking at it is, a lot of these DATs are leveraging their balance sheets in
Hmm.
various different forms and
Yeah.
ways. Some of them are, just pure leverage, and that works great in the bull market, which we're in. In a bear market, it doesn't work out so well. Just look at Celsius, Voyager,
Oh, yeah.
Three Arrows, and a lot of these DATs, this is exactly what they're doing.
Yeah.
So it makes me really nervous. There's good DATs and there's bad DATs. Most of them are bad. Some of them are good. And so
Okay.
we just have to be careful in how we look at these.
Interesting. Well, and I think the key here is DATS, and I look at it in the sense that it is a new mechanism, for better or worse. I mean, obviously with Bitcoin, MicroStrategy has become the poster child. If you look at Ethereum, it's been Tom Lee. there seems to be a face with it, and sometimes that's a good thing because all these assets are decentralized. There's no real, CEO of these outside of with Brad Garlinghouse and Ripple. But the point being is that for the most part, it's difficult for investors to kind of get behind these. So that I think the ETF is one that gives them validity. But I look at the data and I think if it's big enough, or if there's a big enough face person that maybe has more strategies built into it in terms of income process, maybe that's an opportunity to grow that area. But hey, listen, we're going to see because the market will tell us very quickly. Let's talk about the inflow volatility. And you look at inflow volatility right now. Let me share my screen because this is a good example on just where Bitcoin and ETH have been going. That's the Bitcoin tracker right there over the last 30 days. So a lot of volatility down. Now we're starting to edge back up as price goes up. And if you look at Ethereum, pretty much same kind of situation. Volatility almost meeting our low there in terms of outflows. And then, of course, we had a big inflow day. So my question is, are ETF investors, are they ready for this kind of volatility?
Well, I'm going to say yes, but with a hesitancy. There's some that are, many that aren't. But I do believe, a lot of people have said that the Bitcoin 4-year cycle is over,
Mm-hmm.
and that of course bleeds into the rest of the crypto world. I don't believe that it's over, but I do believe that each cycle, each 4-year cycle, it will get muted more and more. So less and less volatility as the number continues to go up. It's really the law of large numbers. You can apply it to really anything. It takes a lot more activity to either reduce or increase price by a certain percent. So are we going to see a massive 80% drawdown in the next bear
Mm-hmm.
cycle? Probably not if you're just looking at the factor of the cycle alone. But if there's a recession or some other global macro event, well yes, and most other risk assets.
Yeah.
As time goes on, the 4-year cycle will become more and more muted, and I do believe there's some wild predictions on price this year, and I'll use Bitcoin again as the price indicator because it's the
Okay.
common one. It's quote unquote risk free rate for the crypto market, kind of like treasuries are with bonds. There's a lot of predictions of 200,000, 250, a million by the end of the cycle, and my number is still 140, and I know that sounds really low, but I just don't expect. It's going to take a lot more work to move that number up. And
Exactly.
by the way, that affects everything else. Anything else that's large market cap, and then of course at the end of the cycle, how much is the drawdown?
Exactly. Yeah.
It's like maybe 30% this time.
Do you think that the cycle goes through Q1 or Q2 of next year, or what's your point of where we stop?
Yeah, it's highly possible. I mean, I make predictions and then constantly review them. I mean, that's what a risk manager does. My current model is having us, probably hitting close to that number in the month of October,
Ooh,
and I'm basing that a lot of that model on global M2 monetary supply.
okay.
So probably October, sometime around mid-November, and of course this starts coinciding with other risk market cycles as well. Thanksgiving, people tend to get a little bit more complacent and don't trade as much all the way through Christmas, and
Yeah,
and then of course January we might see another little pop. But I do think it's entirely possible that we do see an extended rally through Q1, Q2,
interesting.
based on, and this is mainly based on the Fed. So I
Right.
do expect to see one, maybe two more rate cuts this year, replacement of a Fed chair next year,
That'll be
which
huge.
could cause rates to go down even lower. And,
Yeah.
and in that cycle, I mean, that's different. I mean, that's a macro cycle, and that's a little bit different than the current crypto cycle, but it can drive the crypto cycle up.
Well, let's talk about that. Let's look at the likelihood. Well, it's not even likelihood. The Chair Powell is going to exit in May, and we're going to see a new chair come in, which most likely will be very pro rate cutting. Let's assume that the rate cuts continue. Maybe we get two more. At best, maybe three more before Powell takes a hiatus, okay? At that point, and we're only talking about most likely quarter basis point cuts all the
Yeah.
way through. So that's only points, not even a point. Do you think if a new chair came in and said, hey, listen, we've only had a point come off the Fed funds in the last 5 months, I'm ready to pull off a full point or a point and a half, what would that do to the market in general? That could happen as early as May.
Yeah, I agree. So, well, and first of all, even two more rate cuts would only put the short end of the curve level with 5 year, 5 year to
Right.
10 year part of the curve.
Yep.
So, further rate cuts aren't too unheard of to uninvert the curve fully.
Hmm.
So, I actually believe that if we get a new uh, Fed chair in May, the market will probably rally in anticipation of maybe a whole other point. And then once it actually happens, we'll probably see the market fall apart.
Yeah. Yeah. Well, and there you go. I mean, these are the kind of cycle scenarios that play into this. One other thing I wanted to ask you, because obviously as a fund manager, you have to look at significant changes within any asset, whether it's stocks, in this particular case, digital assets. And I know in your filing that you guys listed that you would abandon, these assets if there were significant protocol changes. What would be a significant change, whether it was Solana, XRP, any digital asset? What are you looking for that would say, hey, okay, that's too much, we're out?
Yeah, look, I think most of what we're probably describing are things that make it illegal to work within, whether
Okay.
it's the Bank Secrecy Act or
Oh,
or
all
some
right.
other type of, allowing money transfers between nation states that that we've got on a list, right? So those are the types of things that could be a significant change.
Yeah.
Uh, you know, I'm actually a huge fan of privacy tokens like Monero, but unfortunately, it's not something that works
Yeah.
in the US and the UK and the
Yeah.
EU. So let's say Bitcoin went to a privacy token. I'm just using it as a broad example. Became a private transaction chain, then we would have to abandon it because it would no longer, fit within
Right.
the rules that we have to follow. So
Mhm.
those are the kind of things that we're looking at.
All right. Well, that makes, perfect sense. But what about like major moves? The one that I'm alluding to is the one that just happened yesterday, and that is David Schwartz, stepping away from CTO position over at Ripple. He's now going to pivot over to the XRPL project. Some people would say, "Hey, this is a nothing burger. He's just moving, but he's getting out of the limelight of chief technical officer over at Ripple." But he has been the face
Mhm.
of XRP, really from a technical side. Would that change your opinion anywhere when you're looking at different investments like this?
No, it really doesn't. I mean, and I think that was a great move by him. He's been doing it for a long time. He's still involved. He's still on the board.
Yeah.
And I've met him. He's a great guy. And so no, I mean, it's just like people. I respect people that take a look around and say, "Hey, you know what? I've been doing this for a long time.
Yep.
I'm going to hand this off to the next generation. I'm going to guide them as an advisor, as a board member,
Sure.
and but let new ideas into the fold." I actually think this is a positive.
So this is good for XRP, good for Ripple, especially at the state in which they are in, because I would agree, they are a bit beleaguered. If you think about the management team, they
Yeah,
have been pounded on for a decade, and
exactly.
especially this last 5 years. So I can understand that getting some fresh teams in there to kind of lead the next generation out for sure. All
Yeah.
right, let's talk about predictions here. ETF markets in general, the size of the digital asset ETF market, we're most likely going to, we'll just assume that we're going to see the top 20 by market cap assets in the baskets that are going to be available. And I'm just looking for a percentage of market share of overall investment portfolios. And I'm talking about TradFi investors. People will go out and buy stocks. people who go out and buy ETFs and bonds, gold, etc. How much do you think we're going to see in asset allocation toward just ETFs? Do you think it'll be a 1, 2%? What do you think?
I guess it depends on the investor, but let's talk about just retail, like
Hmm.
retail investors that are making their own decisions. I think we're going to see a number between 15 and 20%
Into
allocated to
ETFs?
digital assets. Yeah,
Wow.
I really
Okay,
do.
well, that would be significant.
Yeah, because here's what's happening. I mean, there's a massive shift right now, and again, most crypto assets are highly speculative,
Hmm.
but it's like speculating on a early stage company or a private equity company that's
I would
harder to
agree.
get access to.
Yeah.
You're speculating on the growth potential of blockchain, of this digital asset or of that digital asset.
Yeah.
Um, you know,
It's pre-seed round for sure, man.
yeah, yeah, and people want to speculate on that, right? I mean, let's take somebody who's probably moderate, just not conservative, probably moderately aggressive, and they might say, look, I'm going to allocate 20% to
Yeah.
fixed income, and I'm going to earn my measly 5%, but that's what I'm setting aside in case everything else goes wrong and I still have some money left. And then they're probably looking at 60% in equities, probably in indexes, but some
Yeah.
speculation on individual names. But 20% is pure speculation
Yeah.
on a lot of these crypto assets because they've seen a history of growth. They want to get that future growth. And again, a lot of the names aren't going to grow like they did in the past because we're not going to see thousands of percent returns on some of these, but still, the expectation is it's going to be higher than the equities market. So you want to get that speculation, knowing that it's extremely risky, but
Right.
I think people are willing to take that risk right now.
That's good. Let's talk about the bear market for a minute, because if we do cycle in the end of next year, whether we cycle into a bear market midsummer, or if we do get a recession that starts to push markets down, you've been in these markets for a long time. You've had a chance to see these. How do ETFs and ETF investors respond? Do they just kind of hold? What do they do in terms of their asset and portfolio allocations?
Well, what's interesting about ETFs is they're actually stickier than direct equity investments.
Really?
Yeah, so because they're usually a basket. A lot of these crypto ETFs are going to be single names, so
Okay.
that might perform a little bit more like equities in this
Hmm.
case. But what we see is that when people feel like they have less money, less spending power, they typically go less risky.
Right.
So they might trim off some of their crypto assets, move a little bit more into bonds. But some of the cracks that we're seeing in the system right now is consumer sentiment is slipping,
Hmm.
unemployment rates are rising. But again, unemployment rates are rising, but it's still well below 5%.
Yeah.
So 5% is natural unemployment rate, and we're overemployed as a country right now. So it'll take some time before we shift over into risk land, but it is trending
Mhm.
that way.
Interesting.
But we are seeing a lot of cracks. And it mostly has to do with consumer spending because we went through so many years of high inflation. And even though the inflation rate is down to about 3%, the inflation that we experienced over the last 4 years hasn't gone away.
Right.
So 80 to 90% of Americans are still struggling to pay their credit card debt, to pay their auto debt, to pay their mortgages, to buy food, simple things like that. So until that shifts, we are going to see a slowdown in consumer spending across the board. We've already
Yeah.
seen the entrances of that, which are things like restaurant bookings, bar bookings, airline bookings, hotel bookings, and
I just spoke.
anecdotally,
I just spoke at a conference in the restaurant industry, and that's exactly it was all CEOs. We were talking about implementing blockchain into loyalty platforms, et cetera. But the roundtable that I hosted with them, they were all telling us the same story, and that is there has been double-digit decline in overall sales just in the past 90 days.
that's
So
right.
it's fairly new, The question is, how long does that last? And does it eventually make its way into a recessionary period where people are just not spending at all?
Yeah. Well, it'll keep going until probably multiple of three things happen. Inflation actually lowers. Now, when people start spending less money, prices do naturally start
Yeah,
coming down.
naturally go down.
And then, of course, the other factor is the Fed rate. So the Fed
Yep.
rate controls the short end of the curve, which is a factor on things like credit card rates, auto rates,
Hmm.
and those are important. Important items for people. We want to see those rates come down a little bit. I do want to see. I'm the cynic here that wants to see the 10-year stay up and housing mortgage rates stay up so that the housing market comes in a little bit on price, because right now most homes are unaffordable. That's another factor.
Yeah.
So until those things happen, I think we're going to continue to see a decline in consumer spending, on things like travel and
Right.
luxury
Yep.
items.
Well, and this will be a key factor here. I'm still on the other side of this because this was another topic was around jobs. I know you think we're underemployed or overemployed, right? Overemployed.
Yes.
Um, when I was with the same group of CEOs, so the whole topic was around retail sales and labor. Because in the restaurant industry, their labor, which I did not realize to what extent labor was mattering to them right now, but it's a significant amount, and they're in a position right now where they're starting to actually consider layoffs.
Hmm.
So cutting teams, that'll put more pressure, I think, on the BLS in terms of what kind of job data we're going to see, because that is a massive industry. That's 20 million people in the United States that are employed by the restaurant industry.
Well, what's
Pretty
happened
big.
though is because we are overemployed, it's been difficult for the service industry to find people to work there.
Yeah,
So they've been hiring people that aren't that great,
yeah,
and we are hiring a lot of people that aren't that great.
yeah.
You start looking at other ways to replace that labor, and that might be things like AI. I've gone to restaurants where they have robots that serve
Yep.
you food. It's like, okay, what can we do to get rid of the people that we don't want employed and still have enough people to like actually run the business? And we've now hit that point where, all right, we've come up with other ways to still get the work done. Now it's time to lay off the people that are kind of below par.
All right. Last prediction: government shutdown is here. Who knows how long this could last? What is your anticipation of the impact it's going to have on these ETF filings getting approved and launched? Where does that play out now?
Yeah, I mean, and look, it's only been 24 hours, so I haven't done enough research. But
I'm getting you early, man.
from the research that I have done, what my understanding is that a lot of staff in the SEC are furloughed at the moment,
Hmm.
and it's mostly what they consider quote unquote non-essential, right?
Yeah.
So the essential things are reviewing active active ETFs, active companies, Qs and Ks, which have to get done, have to process those. Anything that is absolutely necessary. What's not necessary is reviewing of things like S1s and S3s
Yeah.
and any new IPO filings.
Ah,
So all these new ETFs fall within that category.
yep.
So I expect there to be a long delay. There was an article that went out yesterday where a lot of issuers believe that Solana will launch next week, Solana ETFs next week. I just don't see that happening because
Interesting. Okay.
there's no staff to review all the S1s we just filed on Friday.
Would this get pushed outside of the year, or do you think? I guess it all depends on this shutdown. If it goes another, I mean, the last one that Trump did was 35 days. So who knows? That would be, man, that would be devastating. 35 days. Woo.
It would be. I can't imagine it going longer than that, but what do I know? I mean, I'm not a politician. But I will say this: as long as it's not a very long shutdown, I still believe that most of these are going to occur this year.
Okay. All right. Cool. Steven McClurg coming in from Canary Capital, which will be launching an XRP ETF along with the American made ETF soon. Any other ETFs that are in the group for you in the next 6 months?
Look, we really hope that we see a few other ones like Litecoin and HBAR come out too this year. So we're definitely hopeful. We're definitely working
I
towards it.
like it. All right, Steven, thanks for coming in. I appreciate it.
Thank you.
All right, you guys, make sure and like and subscribe if you're not doing that right now here on the XRP podcast. You can do that by just simply clicking it down below. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on the XRP pod. Take care.